Alrighty, guys, I'm back. Today is a Monday. I've decided to upload this video a little bit later compared to my usual Saturdays or Sundays. Reason being is COT reporting came out on the Monday instead of Saturday, Sunday. So, we're waiting for the COT data. Next week it should be back on normal schedule. So, let's go through fundamental analysis for the 1st of July to the 7th of July. COT reporting. So last week, what we saw was, in terms of the pairs I trade, oil and gold still bullish, with market injection in terms of a volume based into oil, decrease from gold. This week we are slightly more bullish on oil, 81% long. We have 1% increase in volume. Gold has remained the same, but you can see it's very bullish. Volume for gold a little bit less, again, compared to last week. So, I still very, very bullish oil and gold. I like this sentiment. In terms of from currency base, you can see there's a little bit more strength in the pound and Aussie, a little bit less in the US dollar because of certain things. One part being the PMI, service and manufacturing, that came out cooler than expected, which we'll go through today. So, the US dollar being even more sort of bearish in terms of a bias change, 2% last week, 2% this week, and then oil and gold still being very strong bullish. I'm very happy to take these trades against the US dollar. So, from a data point of view, what changes did we get? So we had ISM services and manufacturing come out, and both were cooler by quite a bit. So last forecasted for services was 52, above 50, which is better than expected. You can see it's under 50, and also manufacturing way under 50. So what it means is it's a bullish sentiment for gold. It's slightly bearish for oil, in the sense that you want the services, the PMIs, to be quite high. It indicates a flourishing economy, oil being used as a product in regards to the economy. So it's bearish as a reading, but I'm still overall bullish for oil, and I'll give an understanding or an explanation why. NFP was hotter than expected, so more employment, which is negative for gold, positive for oil. Job openings was again more positive, so higher than expected. Negative for gold, positive for oil. Unemployment rate was increased though, which is positive for gold, being increase in unemployment, and negative for oil. Unemployment claims, neutral. So look, even if we have more employment, more job openings, the fact is that unemployment rate is still higher, and even higher than expected. I'd say from a net overall perspective, that's a negative in terms of employment data, with unemployment being 4.1%. So, quite a very interesting week this week. The PMIs were the biggest thing. It really shows strength in trading alongside for gold, with the weakening US dollar, the strengthening in gold, inflation, and the unemployment things. People want to be conservative. People want to invest in a risk-off sort of scenario. So last week data. Now this is the reason why I said last week was so important. ISM manufacturing. So what we had out was demand remained subdued as companies demonstrate an unwillingness to invest in capital and inventory due to current monetary policy. So people are really risk off, quite conservative, fragile. Production execution was down compared to the previous month, likely causing revenue declines, putting pressure on profitability. So you can see companies aren't doing well. People, the sentiment is to save their money, to put into assets like gold, potentially even Bitcoin, just to save as a safe haven currency. Euro had CPI was down from 2.6% in May to 2.5% in June as expected. Euro seems to be, so Euro, the CPI numbers at least are heading down. It seems to be heading to earlier rate cuts compared to USD, with US CPI numbers still being quite high. Powell did speak. It was On the Tuesday, 2nd of July, Power said that we have made quite a bit of progress regarding inflation, but quote unquote, we have the ability to take our time to get this right. So, sort of suggesting that look, rates cuts are coming, but not as soon as we'd hoped. We can, push it back if we need to. The fact that we're not pushing rate cuts earlier means that inflation's still at play, inflation's still sticky, good for gold in terms of stagflation concept, and good for oil because if there's an inflated market, oil prices go up as well. Job openings, strong opening numbers, job numbers were strong as well, but what we go back on is that unemployment rate still ticked higher at 4.1% compared to 4.0 expected. Shows that signs of a cooling market. Even when we get higher job numbers, if the job unemployment rate rises with it, there's no real benefit per se. So again, a very cool reading for the US dollar in regards to employment. And then ISM services, even though ISM services was cooler, theoretically oil should be bearish with a cooler ISM services. People aren't using oil, but Miller, the chair of ISM, actually says the decrease in the index in June is a result of notably lower business activity, a contraction of new orders, and continued contraction in employment. Things are slowing down. However, the survey respondents report business is flat/lower, although inflation is easing. Some commodities have significantly higher costs. And what I did note in that report was that the mention of higher gas prices in California. So this is something I took out. It's a small piece of detail, but I believe in the environment of a hyperinflated market, or not hyperinflated, but a sticky inflated market in the US economy, oil being the main commodity that we use to manufacture things. I actually think, although we have cooler signs for services and manufacturing, I think that's still bullish for oil, keeping in mind the COT report. So I'm actually willing to take a long trade in both oil and gold currently. Next week's data, we have Thursday as the biggest one. We have Powell speak on Tuesday. We might have a little look at that. But we got CPI coming Thursday, and we got PPI coming Thursday. So very big news. We can really see how sticky inflation is. If it still remains at 3.1, 3.2 with gold and oil, I'm still long PPI as well as a secondary sort of measure. So take home, cool news on both ISM manufacturing and services. Very strong bullish scenario for gold, especially when this is coupled with the higher than expected unemployment rate. So employment is favoring gold. In inflation, in terms of at least from ISM services side of things, is favoring gold. The COT data is favoring gold. This week we'll have a look at CPI. We'll see if that inflated number can favor gold as well. So yeah, I'm happy to trade long gold and also oil, as I mentioned before, the rationale for wanting to go long oil as well. So let's actually go through my setup because I'm actually in a gold trade right now. Okay, so what trade have we got in? So we can see right now in terms of gold, it has pushed off, has broken this area of resistance, and this area of resistance momentarily broken, right? Came back down, retested this. I did get into a trade on this candle here, stop loss under these lows, and yeah, we're just going to have a look and see what this does. Hopefully, fingers crossed, this area here does hold. But yeah, we've got, we put our size accordingly. What I want to see is it just to reject that area. So I think it has a strong sort of strong backing to actually retest at least here from what I can see, which is it's a nice chunk, right? If we can get that trade, I'll be very, very happy with gold. But like I said, we manage our risks. We just see how it goes. Oil. Let's have a look at oil because this might be actually a potential trade. We did mark this area here, which was wicked off here. You can see oil's coming down, so we get rid of that. But we've got actually a very nice area of support, right? It's holding. If I can actually see oil push up or just contract a little bit, I'll be happy to enter stop loss, probably even just under here by a little, and just look to ride that up. So we got a nice market this week with oil and gold. I'm confident to trade both scenarios long. I think the fundamentals are backing it up. I'm happy with the technical setup as well. So yeah, we'll see how this week goes. I'll talk to you guys again next week. Hopefully we have a bit more, interesting price action for oil and gold with a trading potentially one of them. So yeah, just very keen to see how I go this week. Yeah, thanks guys.